And now we'll be discussing about the CA Inter time limits here. This contains all the time limits in the audit syllabus for the CA Inter. You might get this PDF in the Telegram channel. The link is in the description below. And the first time limit is retention of the engagement documentation. That is, the auditor has to retain the engagement documentation. The audit file that he maintains with regards to any kind of engagement has to be held till 7 years, not less than 7 years. And the final assembly of any audit file while doing the audit has to be completed within 60 days from the date of auditor's report. And that's second. And internal audit is this will discuss in the monetary limit section, but why I have given here in the regards to time limit section is when during the transitionary provisions that all these limits have been complied with the have been touched by the company, and they have not appointed the internal auditor by the time this Companies Act 2013 had been came into effect. Then within 16 months, within 6 months, within 6 months from the commencement of this act, they have to comply with the internal audit provisions. All the companies who have satisfied these monetary limits. That's a transitionary provision. And with regards to fraud reporting, we know that was fraud reporting, let it be any fraud, whether it's below 1 lakh, 1 CR or more than 1 CR, what the auditor should do. He has to communicate within 2 days to the board of directors or the audit committee. Okay, if it is 1 CR or more, then what he has to do? He has additional responsibility to report to the central government. So what they ask within 45 days for seeking reply to what? To whom? The board and the audit committee. The auditor communicates within 2 days to board of directors or the audit committee and seeking their reply with regards to that fraud within 45 days. And after their reply, the auditor shall communicate to central government within 15 days in form ADT 4. That's what you have to write. Then that's here with regards to disqualifications of the auditor. If any relative or partner holding any security or interest in the company in which he is an auditor, from the date of acquisition of that interest within 60 days, the corrective action has to be taken by the auditor. That is, the responsibility lies with the auditor. If they hold any security or interest more than 1 lakh, up to 1 lakh of the face value, that's fine. But more than 1 lakh, the auditor has to make corrective actions within 60 days. That is, you see here, it may be noted that the relative may hold security interest of the company face value not exceeding 1 lakh rupees. That is, up to 1 lakh, the relative may hold the security or interest. And with regards to here is file a notice with regards to auditor's appointment with register. Since it's a statutory auditor, it is 15 days. When it is a cost auditor, that we'll discuss later, it's 30 days. For cost auditor, it's 30 days, and for a statutory auditor, it is 15 days. They have to communicate with the registrar. And with regards to the removal of the auditor, a special resolution has to be formed. They have to take a permission or special resolution by the board. First, they have to take special resolution by the board to remove the auditor before expiry of his term. And they have to communicate to the central government in form ADT 2. Within how many days? Within 30 days. And after that, the central government will give an approval to remove that auditor, right? Then within 60 days, they have to pass a special resolution in the AGM. They have to make an AGM there. They have to hold a general meeting. And they pass a special resolution there also. And when there was a central government applies to the tribunal with regards to any kind of change that was required by the auditor, then if the tribunal satisfies that the auditor has to be changed for that company, it has to give an order within 15 days. If it's satisfied, the change of auditor is required and he will not function as auditor, and the central government may appoint another auditor in that place. Okay, these were two things. And CNDG has rights with regards to test audit or supplementary audit or comment upon the supplementary audit, etc. These comes under CNDG rights. Within how many days? Within 60 days, they could go and conduct a supplementary audit. And books of accounts that were kept at a place other than the register place by the company, then within 7 days they have to intimate to the registrar in writing. And with regards to cost auditor appointment, the cost auditor has to be appointed within 180 days from the commencement of every financial year, and he will hold the office after the expiry of till the expiry of 180 days from the end of the financial year, and he also have to give or cost audit report then only. And with regards to the, as we have discussed earlier, for statutory auditors is 15 days for the intimation to registrar. Now it's cost auditor, it is 30 days to intimate to the central government. And the cost auditor appointed will hold the office till the expiry of 180 days, and any casual vacancy, whether it be casual vacancy of any auditor or any cost auditor or LLP auditor, any casual vacancy, whether it's through resignation, removal, etc., any casual vacancy has to be filled by the board of directors within 30 days. Okay. And the cost auditor shall submit cost auditor report within 180 days from the end of the financial year in form CRA 3. And with regards to the company shall within 30 days from date of receipt of cost audit report shall furnish in form CRA 4 all the information or cost audit report to the central government with regards to that for every reservation or qualification that were contained in form CRA 4. And with regards to CSR projects, if any project that was ongoing, then no problem at all. This provision does not apply for that. If any projects that were held or stayed, then if that, okay, for 2% or something amount that of the turnover or something else have to be spent as per CSR expenditure, right? If they were not spent in the year, then within 6 months from the expiry of the financial year, they have to spend or they have to transfer that amount, the unspent amount, to a fund specified in 7 of Companies Act, Schedule 7 of Companies Act. There's a list there, and they have to spend within 6 months here. Unspent amount has to be transferred to the fund within 6 months. And with regards to the non-eligibility of appointment as an auditor, if the auditor had been convicted by a court and the 10 years had not elapsed from the date of conviction. You see, from the date of conviction, not from the date of expiry of the imprisonment term, etc. But remember, it's from date of conviction. From then, 10 years have not elapsed. Till then, he will be not eligible further to be appointed as an auditor. And auditor appointment term, we know that if it's an individual, 1 term of 5 consecutive years. If it's audit firm, 2 terms of 5 consecutive years. And with regards to rotation of auditors, there's a cooling period for the period of 5 consecutive years for him. And the incoming auditor shall not be from the same network of firms. And we have got in MCQ, we have discussed in our case scenarios also, right? What's the name for a network firm could have? That is affiliates. Okay, some name, something like Royal Affiliates, etc., like that. And with regards to cash credit loans, when the cash credit loans or cash credit could be accounts could be out of order, is that when continuously the outstanding amount exceeds sanction limit or drawing power. That's one case. If at all, it was not, the outstanding amount was not excess, but there were no credits for a period of 90 days. In both the cases, it is treated as an out of order scenario, or the credits were not enough to cover the interest at least. First of all, they are not. First of all, the outstanding limit was exceeding the cash limit and drawing power. Second thing is that there were no credits at all for continuous 90 days, and moreover, if there were credits, they were not even sufficient enough to cover the interest at least. Then for a continuous 90 days, then it's an out of order account. And government guaranteed advances is that whenever government gets guaranteed any kind of advance, it's like promising that government would pay even if the borrower had not repaid the loan. So with regards to that, the central government, if it's guaranteed by a central government, even though that it's an NPA, For the asset recognition purpose, it need not be treated as an NPA. But if so, a state government, it would be treated as NPA both under the asset classification and income recognition also. But if it's a central government guaranteed advance, just for the purpose of asset classification, it would not be treated as NPA. It would be treated as NPA for the income recognition classification. Okay. For the period of 90 days with regards to that, and drawing power is the limits or the stock statements have to be reviewed for at least 3 months. It should not be older than the stock statement, should not be older than the 3 months, otherwise it would be treated as an irregular. And with thus the continuous provision with regards to that, and the drawing power register has to be updated every month. And with regards to C&AG audit or C&AG rights, we have already discussed that the C&AG has right within 60 days to conduct a supplementary audit, comment upon or supplement such audit report, and do test audit. And with regards to NGO accounts, you see, so it has to submit his accounts of the NGO audited by the prescribed authorities and all, and it has to be submitted in that format within how many days? Within 60 days from the closure of the financial year, that is by 30th May. Remember, this is not May 31st, it is May 30 for the NGO. Okay, an O here and an O here. Okay, 30th May. And returns to be maintained and filed by LLP, the same thing. They also have to be submitted with ROC within 60 days from the closure of the financial year in Form 8, the statement of solvency, and annual return in Form 11 within 60 days, and Form 8 is within 30 days from the end of 6 months of the financial year. So there's a different time limit here, and for Form 11 it is 60 days. Please make a note over there. And with regards to the LLPs, if the LLPs have not filed Form 11 or Form 8, they can pay within 300 days with an additional fee. Even after the due date, they can file the forms for 300 days with the additional fees. But even after the 300 days, if they fail to file those forms, they will be liable to be prosecuted. And with regards to the appointment of LLP, as we have already said, if it's a casual vacancy, that has to be filled within 30 days. And with regards to inquiry, under section 78 for the registrar, there have to be a prior notice of 15 days have to be given to the multi-state cooperative societies. And with regards to central registrar powers, what the central registrar powers, it has powers to access all the books of accounts. And with regards to that, and what he can do, he can serve a notice for the general meeting not less than 7 days. Okay, this is the time limit for the general meeting notice for the societies. And with regards to that, what all the other powers he has powers to examine any person on oath. And the central registrar, within a period of 3 months from the date of receipt of the report, what he can do, he can communicate the report of inquiry to the society and the financial institutions to which the society is affiliated. Two parties, society and the financial institution where society is affiliated, and the person or authority from whom inquiry is required or needed. And with regards to the inspection under section 79, same as per inquiry here also a prior period of 15 days notice is required. And the appointment of auditors other than a government company, it has been given as a paragraph or a tree diagram that would be attached in the Telegram channel. What is that? For the first AGM, it would be hold till the first AGM, and the later it would be ratified, and he will hold till 6th AGM, and later on every 5 consecutive years. And every year it will be ratified for an individual. If it's an audit firm, for 10 years, every year it will be ratified. That's what they're talking about. And what are the special features for the cooperative audit? Is that the overdue classification. The overdue classification is 6 months to 5 years and more than 5 years. It has to be classified in this. Usually for every company, what we do, like 30 days or 90 days, we usually go with like that with regards to SMEs and all, for the banks as well. But here it is for a longer period of time, 6 months to 5 years and more than 5 years is the overdue classification. And with regards to the appointment of auditors, under Multi-State Cooperatives Act, it is the same. First, the board will have to appoint the first auditor within 1 month from the date of registration. That is same as per the company also. And if they fail to do that, then the society members exercise that option and they appoint the first auditor, and he will be continued till conclusion of next annual general meeting of the society. And with regards to central power of central government is that, you see, on receipt of report by the special auditor, if the central government has taken, they can take some action with regards to any kind of fraud or misconduct that had happened in the society. If it had not taken any action, the report within 4 months, then the society would circulate the extract or copy of that along with all the members, and among all the members, or it has to be read before in the meeting, in the next general meeting. With regards to that, 4 months, the central government has to take some action from the date of report of the special auditor. And inquiry, as we have said, at the central register within a period of 3 months. What we have discussed it here, it has to communicate to the society and the financial institutions in which it is affiliated. The same thing also goes here. And with regards to that, and the final assembly 60 days, that's also here, that's also discussed in starting. And retesting of controls in an entity has to be retested by the auditor at least once in the 3 years based upon the professional judgment. It could be a lower period of time also. And we discuss about CA Inter monetary limits. It consists of all monetary limits in the audit syllabus. Just go through this PDF just the day before the examination, and you are good to go for that. And you will get this PDF in the Telegram channel. The link is in the description below. And do share it with your friends. And first, with no delay, we'll move on with the monetary limits. You see, shares should not be issued at a discount. If they were issued, they'll be liable for a penalty. If the officer in default, then what? The amount equal to the amount raised through issue of shares at a discount. That is all the amount. That's not the premium amount. That's not the discount amount that was penalty. It is the amount that was raised is the penalty, or a 5 lakh rupees, whichever is lower. And if the company is liable to refund all monies received with interest at a rate of 12%. It's liable to refund monies with the interest rate of 12% per annum from the date of issue of shares to the persons whom the shares were issued. Till that day, this is with regards to the penalties, liabilities, with regards to when shares were issued at a discount. This is the penalties for that. And with regards to rounding off provisions, if a company is having total income less than 100 CR, then it could be rounded off to the nearest hundreds, thousands, lakhs, millions, or decimal thereof. And moreover, if the total income is 100 CR or more, if it touches 100 CR, then the rounding off should be is minimum lakhs, not hundreds or thousands. Minimum lakhs and decimals thereof. And with regards to the disqualifications of auditors, we know that the relative of the auditor should not hold more than 1 lakh. That is, till 1 lakh, okay, no problem. The face value is still 1 lakh, no problem. If it exceeds 1 lakh, then the auditor has to make corrective actions within 60 days. And the same with regards to the indebtedness. Indebtedness is excess of 5 lakhs. That is still 5 lakhs, no problem. If it is exceeding 5 lakhs, then the auditor is disqualified. And even the guarantee till 1 lakh, no problem. In excess of 1 lakh, the auditor is disqualified. And with regards to the disqualifications of auditor, the 20 company limit was there, right? But that does not include, the 20 limit companies do not include OPC, dormant company, and small companies, and a private company having paid up share capital less than 100 CR. If it touches 100 CR, then that is added in the 20 companies list threshold limit. If it touches 100 CR, if it is less than 100 CR, then those were not included in the 20 company limit. Even the same thing as like here also for the lakhs one, rounding off also, if it touches 100 CR, it has to be done in the lakhs. Rounding off has to be done in the lakhs. And with regards to that, with regards to the casual vacancy provision, it has to be, the board has to fill the casual vacancy of the auditor, whether it be LLP auditor, cost auditor, any auditor. they has to be complied within, they have to fill the casual vacancy within 30 days. But if they do not do that, so then in case of the failure, the auditor shall be liable for a penalty for a 50,000. If that casual vacancy is through resignation, what the auditor has to do? He has to inform the registrar in form 883. If he had not done that, auditor shall be liability for a penalty. You see, what's the difference between penalty and a fine? Fine is something that you pay to the court when court was involved. Penalty is something act that is paid to the central government. So you have to pay a penalty of, auditor has to pay penalty of 50,000 or the remuneration of the auditor, whichever is less. You see why I haven't given the monetary limits here is that even if I write like 50,000 rupees or remuneration, whichever is lower, I might waste the space. You see, numbers were something that were picture memory. They were not something like a song or so. It is mostly based on the picture memory. So it is better to take a printout of it. It's available in the Telegram channel. Take a printout of it and write in what all the numbers you like. If I could write 50, 50, it depends upon your image perception. How do you remember? You write it in this column so that you'll remember that most efficient. You see, I say only test how you have written in the examination, what the correct amount is. So make sure you do more effort with regards to remembering of the penalties. You see, we cannot remember penalties and all such things because a lot of mnemonics have been, you have read, but don't remember audit with regards to mnemonics because audit is mostly like a behavioral science where you have to, in most of the situations, like 80 to 85%, you have to write how the auditor should respond or how the auditor should report. So don't you see, mnemonics is mostly like straight to straight direct question. You cannot remember, you cannot do that. So you see, don't try to remember audit based on mnemonics. Mnemonics is like something you're remembering from out of the box, from nowhere. There's a high chance that you would just mess up with the mnemonics, right? So don't remember audit with regards to mnemonics. Instead, put that efforts in the penalties like this, the picture memorization and all, and or try to just write in a way that you remember this instead of putting your effort with regards to mnemonics, which is you could write by understanding. Try to put some efforts with regards to remembering the time limits because they also contain some marks in the MCQs and all. You see, giving a 2 marks for this and overall a 6 marks would change our result, right? So that's why instead of mnemonics, try to put some effort here in remembering the penalties. It is not so highly impossible to remember, as we have linked this here, and with regards to here of the hundreds here, right? Since all the confusions happened between the borders, so we have to remember some extra effort. All wars happen at the borders, right? So in exam, we'll get confused if they have given 100 crores, whether it would be included in 20 companies or not. If you haven't linked with this kind of thing 2 to 3 times, you find there were lesser number of things to memorize and you could just print it in your mind very well. And with regards to that, about coming back to the penalty here, auditor has to pay 50,000 or remuneration, whichever it is, in case of a continuing failure. What is continuing failure is something and penalty which was led until you obey that, until you obey the rule or fulfill the obligation that you have filed. What is your obligation here to file the form 883? This continuing failure will be applicable to you. Have to pay penalty for that, 500 per day till you comply with that provision, subject to a maximum 200 lakhs rupees. You see, this is a plus here. You have to, since you have not filed 883, you have to pay the penalty of 50,000 or the remuneration, whichever is less, plus since it's a continuing failure, till you comply, there would be a 500 rupees per day, subject to a maximum 2 lakh rupees. So that's with regard to the continuing failure, and with regards to fraud is why we have given is for the 1 CR monetary limit here. If it is less than 1 CR, you need not report to central government. If it is 1 CR and above, 1 CR is included, 1 CR and above, then central government you have to report. And if you haven't reported, and if it's a listed company, then the penalty is 5 lakhs. If it's unlisted public company or any other company, the penalty is 1 lakh rupees. This fraud reporting is applicable to even cost auditor and a secretarial auditor also. If they're listed, 5 lakh rupees penalty. If it's unlisted or any other than listed company, it is penalty of 1 lakh rupees. And with regards to the CARO applicability, and why we have given CARO applicability is here for the private limited companies limits. Private company limits is that a private company limit not being a subsidiary of any holding of a public company, having paid up share capital and reserves and surplus. You see, this is why you have to take calculator for your audit exam. Don't mistake that you have to not take calculator. Take calculator for the CARO applicability or something other else for the quorum calculations, etc. Paid up capital plus reserves and surplus not more than 1 CR, also on the balance sheet date, that is less than 1 CR or equal to 1 CR, no problem. That is, if it's included 1 CR, the CARO is not applicable, and which does not have total borrowings exceeding 1 CR rupees. That is, until 1 CR, no CARO is applicable, and its turnover does not exceed 10 CR, including the total, including the discontinuing operations, it does not exceed 10 CR. I have forgot to given here. It's 10 CR. Then CARO is not applicable. You see, 147 section is with regards to punishments from the contravention of section 139 to 146. If a company, the company had contravened, then fine should be not less than 25,000, but which may be extended to 25 lakh rupees if they have contravened these provisions. And for the every officer in default shall be punishable with a fine which shall not have less than 10,000 rupees, which may be extended to 1 lakh rupees. Till now, we have seen all penalties. Now, under section 147, this is all the fines that they were putting on. So, make a note over it. If the auditor, where company contravenes any provision with regards to 139, 144, or 145, and he shall be punishable with a fine which is not less than 25,000 rupees, which may be extended to 5 lakh rupees, or 4 times the remuneration of the auditor, whichever is less. And it's mostly with regards to the imprisonment, and with regards to that, make a note out of it. And reporting requirement on adequacy of the internal financial controls. You see the difference between the controls, internal financial controls were discussed in the keyword kit series. Do check that out. And what all the companies have to give a report on the requirement of adequacy of the internal financial controls for companies other than a 1% company, a small company, or a private company having turnover less than 50 CR and whose aggregate borrowings at any point of the time, if the repayment was done before the last month, before the end of the financial year, then also if at any point of the time, if the borrowings were less than 25 CR, other than those companies, if it touches 25 CR, then this reporting on adequacy of internal financial controls was applicable. If the turnover also, if it touches 50 CR, this reporting is applicable. And OPC and small companies were not required. And remember, make a note that do check the amendments video. It's small companies turnover limit have been changed. It's 4 CR and turnover is 40 CR. With regards to applicability of the cost records, when the cost records have to be maintained, when a manufacturing entity is having turnover of 35 CR or more, it has to be maintained. And the cost records, cost audit is applicable when its turnover is, if it's a regulated sector, if turnover is 25 CR or more from a company, from the company, and if it's non-regulated company, then the turnover should be 100 CR or more, and from a single product, it's 35 CR or more. And regards to the cost audit, when the cost audit is applicable for the bank, with regards to any kind of the loan, is when the funded exposure is more than 5 CR, then the cost audit is applicable. And with regards to the inspection of fees, LLP documents can be inspected, all the incorporation document, names of the partners and such changes in the annual report, and all these documents can be inspected. That is, for the inspection for annual return, the fee is 50,000, and for any extract of any document, 5 rupees per page is the fees. With regards to the audit of receipts and expenditure, where any kind of body or authority which have been substantially financed by the grants or loans by Consolidated Fund of India or any kind of state government or union territory, then what I'm saying is that the authority or the body, it's getting financed by the central government, some sort of government. That is not less than 25 lakhs. That is a minimum 25 lakhs. It's when we say it's substantially financed, when there's a minimum 25 lakhs of grant was given, and that grant is not less than 75% of total expenditure by that. That is, that 25 lakhs rupees or that kind of grant amount that was given, that is minimum 75% of the expenditure of the body or the authority, then it's called substantially financed. So they could go for audit of receipts and expenditure, the central government. With regards to restrictions on the shareholdings for any kind of society, when a member of society other than registered society, this restriction on shareholding is not applicable to a registered society. For unregistered society, a member shall not hold a maximum of 20% of the total shares or a value that is more than 1000 rupees, as the member's liability is limited. That's why this restriction has been given. For a registered society, there's no restriction. For other than registered society, a member shall not hold maximum 20% of the total number of shares or a value of 1000 rupees. Remember this 1000 limit with regards to society, we have somewhere to deal with again. And this is the same that we have discussed earlier. The fraud reporting was also the liability or the responsibility of the cost auditor and the secretarial auditor. If they have not done so, there will be a penalty. If it's a listed company, they're liable for a penalty of 5 lakhs. If other than a listed entity, for 1 lakh rupees. And for audit of non-governmental organization, you see an NGO, that is non-government organization, created a trust. When it's a trust and having immovable property worth more than 100 rupees. Yes, you heard that right. That is 100 rupees. This is the snippet of the study material here. This is 100 rupees, not more than 100 rupees. You see the act or year number, that's something around 100 years back, more than 100 years back. They haven't amended till that date, so remember that. So if they have to get registered mandatorily under the trust. And with regards to that, and the audit of multi-state cooperative society, it is where the qualifications of the auditors were the auditors should not be eligible for appointment if they were body corporate or they have been employee of that society, or the member or who is in employment with the society, and a person who is indebted to that or have given a guarantee for amount exceeding 1000 rupees. I said to remember the 1000 rupees and the word society, right? This is where comes here. 1000 rupees, if they have indebted, then they are not eligible. And with regards to LLP audit, the accounts of LLP have to be audited whose turnover does not exceed 40 lakh rupees. If it touches 40 lakhs, LLP audit is applicable. Or whose contribution, that's capital contribution, does not exceed 25 lakhs. That is, if it contribution touches 25 lakhs, LLP audit is applicable. Okay, that is when we have to do LLP audit. That is with regards to the monetary limits. And if